Right. Yesterday's data, I characterize it as good enough. If you look at industrial sector, industrial output was 5.9%, and service output was 5.6%. So if you look at industrial sector and services sector, they're running about 5% year-on-year. So GDP tracking should be okay considering the government's goal of around 5% growth. And the patterns that you just described, still very weak housing market and very strong manufacturing, both production and investment in manufacturing sector, that has been ongoing for quite a while and is likely to persist. So altogether, I don't think the on-the-ground data and activity level has changed that much. The divergence between manufacturing and property, the fact that activity bottomed somewhere August last year and had been improving on policy push. So that picture hasn't changed. And for investors looking at macro, they need a macro picture, both policy and data to be good enough. I think yesterday the consumption message and the January-February data are good enough.
Right. And on the retail sales front, you think this is a sustainable number, growth rate?
Retail sales, if you look back before COVID, retail sales growth in China was running at 8% per year. Last year, it was only 3.5%. Now, there is an inflation problem here. If you have retail sales measured in nominal terms and inflation, let's say, was 2% and now is virtually zero, then that shave off 2 percentage points. But still, 3.5% retail sales last year was too low. So we do think there should be some improvement in retail sales growth this year, both just coming out of the trough and because the consumer goods trade-in program, but catching back to a more reasonable level, let's say reasonable retail sales growth should be 5%. We're still some distance to go. Yesterday, we only got 4% year-on-year in retail sales.
Got it. In one of the points that you've highlighted to boost consumption growth, you're talking about increasing income and wealth, which is, of course, parked a lot in the property sector and the equity markets. With the equity markets rallying, do you think that that can change the way consumers think about spending? Because it's really about the consumption impulse to kick in.
It helps, but probably not sufficient. If you think about the stock market share of household wealth is much smaller than the property market. And in previous research, we have done analysis looking at, is the cash flow more important for consumption, or is the wealth, the stock of wealth, that's more important for consumption? And we concluded it's really the cash flow. This is where the jobs and wage growth and income growth, that comes in much more important in driving consumption than equity market performance and housing market stabilization. I'm not saying the wealth doesn't matter, but on a relative basis, I think it's really important to stabilize the labor market and making sure people have the confidence that they have the job and they have income growth trajectory moving in the right direction.